Hey guys, what's up? Alec back with the daily stock market, and look at that. Snapchat down 43%, Pinterest down 23%, and several stocks down around 10%, 15%, and more. We even have Facebook down 7% or 8% on the day. So let's dive into what's happening with Snapchat. And we're going to go over Facebook as well. Make sure you stay throughout this entire video. Drop a like and subscribe for future videos. But let's get right into it. So first off, we have Snapchat down 43% on the day. Holy cow, Snapchat has crashed to the max, down 55% in the last month, down 77% from the last year, and from highs, we have them down 85%. An absolute crash. The all-time low is $5 per share. Right now, we have Snapchat sitting at around $13 per share, $12.94. And a lot of people are asking, is now the time to buy Snapchat? Should I buy the dip? And even if I buy at $12 and sell at $30 or $25, that's still around an 80% upside on Snapchat. Okay, so let's dive a little bit deeper. Here we have an article by CNN Business. Social media stock plunges on Snapchat warning. Okay, we also have an Amazon alert coming in. An Amazon worker will make a novel shareholder proposal next week. Probably not a big deal on that Amazon alert. But back to the Snapchat warning. Here we see Wall Street was not in a particularly social media mood on Tuesday. Social media stocks plummeted following an ominous earnings warning from Snapchat's parent company. Shares of Snap plunged more than 40% Tuesday and hit their lowest level since March 2020, just after the pandemic here in the US. The company said it's in a regulatory filing that in a dim outlook was due for the fact that the macroeconomic environment has deteriorated further and faster than anticipated. News of Snapchat woes dragged down shares of many of its rivals. Facebook and Instagram owner Meta Platforms Facebook fell 8%, while Pinterest tumbled more than 20%. YouTube, Google slid around 5%, and then we also had some more companies falling as well. The social setback put a damper on much of its market's overall mood. The tech-laden NASDAQ was down around 2.5% today, which was Tuesday. The S&P 500 dipped 1%, and the Dow was flat. Twitter, which may or may not be acquired by Tesla Elon Musk, currently on hold, fell 5%. The stock is now down nearly 35% from Musk's original buyout offer of $54.20 per share. Also, by the way, a side note on that, I watched a full interview with Elon Musk, and it sounds like just in the interview, he's definitely not going to be buying at $54.20. He might be buying lower, and he might get like an average cost like $45 per share, $40 per share, for example. He might be able to negotiate a better deal. But in my opinion, he's probably just going to stay away from Twitter. In my opinion, it sounds like he's out of the deal unless he's just trying to play hardball to get a better deal on the share price and not $54 per share. Investors in a social media stock were clearly nervous that advertisers may be pulling back on marketing spend. One quick thing to note in this article says in April, Snap guided for second quarter revenue growth of between 20% and 25% and EBITDA between $0 and $50 million. Spiegel said Monday that revenue growth in the second quarter will be positive, but growth will fall short of previous guidance. Take a look at Snapchat's revenue. Here you can see they're growing by like 50% on average for the last 5 years. So the total revenue has been outstanding. The balance sheet also looks good. They have $7 billion in assets. So them going bankrupt or out of business isn't a big concern because they can easily pay off all their debts and liabilities with the assets they have accrued. Their income statement is where it gets a little bit poor. Here we can see they're a negative earning company for the last 5 years, and they've been growing a little bit, on their net income, but we really want to see Snapchat become a positive earning company. Once they have like $1 billion in profit, $2 billion in profit, I think the stock price could really turn around. Overall, that's what's happening with Snapchat, down to $12 per share. Analysts are surprisingly a little bit bullish on Snapchat. The average analyst has around $30 per share on Snapchat. So this could be a buy the dip scenario. There's risks with the profitability margins on Snapchat. Obviously, they're doing good revenue, but we really want to see them a positive earning company before we see the stock start growing to around $50 per share, $30 per share, or anywhere in that ballpark. I'll tell you guys, under $10 per share is a lot more attractive for me, which would be around a 30% additional drop from where it's at now. We have all-time highs of $80 per share, so it's definitely not out of the question for Snapchat to 5x or have a 500% return on your money in the next probably 2 years, 2 to 3 years. Could even take as long as 5 years to become for Snapchat to become a profitable company. There's also huge risks with Snapchat if they never get to that profitable point. There could be some short-term potential with Snapchat up to around $25 to $30 per share, especially if I can get in closer to that $10 per share. So personally, I have price alerts set at $10 per share. Even if I get in at $10 and sell at $15, that's still a 50% return on my investment. So I think at that point, the risk versus reward scenario would be worth it. After that, we have Facebook down 7%. Holy cow, okay? So we see them down 42% in the last year from all-time highs of $376 per share. Okay, we also see lows in the last 5 years of $156 per share and $133 per share. So the question is, will Meta platforms go under $155 per share? I think there's a possibility. As you can see, there is a downward trend right now. They have been, since the lows that they made in March, they've been making lower lows consistently. So if we see below $174 per share, I have price alerts set at $175 and $173 per share, because those are big supports for Meta to imply that it can go down to $150 per share. So if it breaks that support, we're looking at $150 per share, $155 per share for Meta platforms. And this is one of my favorite stocks in the whole stock market. I've done a deep dive in the past. If you look through my thumbnails, I think 2 weeks ago I uploaded it, and the thumbnail was, "This is our next home run stock." Okay, so on the thumbnail, this is our next home run stock. If you want a full deep dive, I definitely recommend that video. I think that Meta platforms can be $300 per share in the next 12 to 24 months, which would imply around 100% growth, especially if you're able to get in closer to that $150 mark. And we also have Shopify headed to the $200 range, down 11 more percent on the day today. All right, Shopify has just seen an absolute travesty of its share price, down around 80% from all-time highs. This was a $1,700 stock in the past, and it's down to 2019 lows. Shopify is a company that has recently came into profitability, is why I like them so much right now. Okay, as you can see in 2017 to 2019, they haven't done much on the net income growth. And then from 2019 to 2020, they had their first profitable year, growing net income around 300%. And then they had a huge 2021 with 800% growth, with $3 billion in total net income. Okay, and revenue, look at that. Revenue has been growing 50% per year for the last 5 years. So you'll be hard pressed to find a company that's down 80% in the stock market from their all-time highs in like 1 year, that's been growing 50% revenues for the last 5 years, and also has grown their net income to $3 billion in net income. Okay, so look at that. Their total revenue was $4 billion and their total net income was $3 billion. That's like 75% profit margins at that point. So Shopify can grow into an extremely profitable company if they keep up these growth rates over the next 5 years. They could be a wonderful company to be a part of. This is why I also like them. They have one of the best balance sheets in all the stock market, with zero risk basically of going out of business. Look at that, those total assets, $13 billion in total assets and $2 billion in liabilities, okay? So they have so much cash and cash equivalents. They have 2 billion in cash and cash equivalents, 4.8 billion in short-term investments, and so on and so forth. And their total liabilities are pretty low too, only 2 billion in total liabilities. So they have enough cash and cash equivalents alone to pay off all their liabilities, which is phenomenal. It's something you really want to see for a company to know your money's safe. However, I think the reason why Shopify is down right now, we saw that huge net income in 2021 of 3 billion, but I think for 2022, they're going to be reporting a negative number of net income again, which would be detrimental for the company and obviously why the share price is headed down. If we look at what analysts have to say about Shopify real quick, we have an 88% upside in the next 12 months to around $600 per share. And we even have some 5-star analysts at $800 per share in the next 12 months. This is all reiterated around 20 to 8 days ago. We even have a 4-star analyst coming at a $400 price target in the next 12 months, just reiterated 2 days ago. Overall, Shopify is a growth story that I personally want to be a part of over the next 5 years. The risk versus reward are at around $300 or under $300 per share. I think it's going to be great for long-term investors. This is also one that you can stuff in your 401ks or Roth IRAs and just set it and forget it. Buy a share or 2 shares and watch it grow considerably. I think that Shopify could get back to profitability once again. And I also think that they will grow their revenues considerably year over year for the next 5 years. And in my personal opinion, this will be a $100 billion company once again, even if it takes 2, 3, 5 years. I think it will. The share price will be a lot higher in the future than it is today. So I hope you guys really appreciate that video. Smash a thumbs up, subscribe with post notifications on if you got any value out of this video, and share this video with a friend who was shocked by the Snapchat fall. Also, send me a DM if you want to join my close friends list. Read success number 5, success number 4. We now have 1,500 students enrolled in the daily stock market close friends list. We have over 500 positive testimonials. I'm also raising the price by 100%. So if you've been meaning to get in the program for a while, now is definitely the time. I'm changing the prices on the website today. So message me on Instagram today and I'll get you all those discount prices. Other than that, share with a friend. Make sure you like this video and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.